This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. It's time for your daily dose of daily market wisdom with master trader Nick Santiago. Today is May 19th, 2020. This is show number 37. So, Nick, we left off yesterday alluding to the major run-up in silver, and now it's a reality. It's up another 40 cents or so today, and gold is going up as well.
Yeah, today we have a really strong day in the precious metals. As you know, I got out of my silver position, which I'm kind of kicking myself for. But I mean, as a trader, we do these things sometimes. We get out a little bit early, but I made tremendous profits on it. And like you said, silver's up another 2%, over 2%, 2.3% today on spot. So it's really just a tremendous move. And this was just all chart pattern. The chart was telling us that was setting up. Now, silver, in my opinion, I'd love to see a pullback. I think we're due for one here, and then we just redo it again because the move it's making now is telling us it's going higher. So, again, now I have to sit back, I wait, but all the precious metals right now are holding up so well. Even the mining stocks are holding up really well, and I love the patterns on all of them. But I don't chase anything. I always wait for it to come back to me, give me a setup, and then I'll get involved in it. Remember when I was talking about getting into silver, nobody wanted it.
Yes.
And, now everybody's clamoring to get into it. So, we did well on it. Now we'll just wait for the setup again. But it does look poised to go significantly higher. Yeah,
and that was only like a couple weeks ago when we talked about opening the position. I took a little dabble into it, made 50-60% within 3-4 days, I think, and got out a little after you, but yeah, the entry point will come. It'll probably go down 1% or 2%, maybe a little more, maybe for a couple of days, I guess, and then it's back to the races.
Yeah, you just let it set up. Like I always tell everyone, as far as the charts go, don't chase anything. Don't be an eager beaver. When you chase things, that's when you get hurt. That's when you're out of the money. That's when you're in pain. Sit back, let the chart pattern set up. I remember getting into silver, and I remember my members were calling me and emailing me saying, "Hey, does this position still look good to you? Does this position still look good to you?" And I kept saying, as it was trading down ever so slightly each and every day, it got almost down to the 1350 level. I said, "This is a golden pattern. You don't want to disturb it. Just let it simmer." And I call it the coiling and boiling. And, you could see if you look at a daily chart of the SLV, we could use that. Or if you even want to look at a chart of silver itself, you'll see that how it was just consolidating. And those are one of my favorite patterns because what that is, it's just institutional accumulation. And again, big blast off. Now you're looking at the SLV trading above 1620 right now. It's just an incredible move.
Yeah, well, and as if that weren't the only thing here, we're looking at our financial leaders, Fed Reserve Chairman Jerome Powell and Treasury Secretary Stephen Mnuchin. They're going to testify in front of the Senate Banking Committee. So what's going on there?
Yeah, so they're doing that today. They're going to talk predominantly, I guess, about the CARES Act and all this, stimulus that they've thrown into the system. So we'll see what comes out of it. But there's, always going to be some Republicans on there, some Democrats on there. Lately, things have been getting very, very political, especially with the Congress, which is controlled by the Democrats. So we'll see what comes out of there. I think most of the stuff in this important and highly touted hearing today is already known. Jerome Powell actually was on 60 Minutes this past Sunday, and he already said that the central bank can still do a lot more as far as monetary policy is concerned. So basically what that means is they can digitally continue to print money. But either way, we'll see if something comes out of it that's, somewhat political. I mean, I've never seen a country this divided between, conservatives and liberals. It's really almost disturbing. But it is a reality. So we'll see if there's anything out here that, ruffles some feathers. I'm not so sure. I think a lot of this is probably just a dog and pony show, but you never know at this stage of the game.
Yeah, totally. And while we might be divided, one thing I think we're becoming less divided on, Nick, is pretty much the lockdown and the need to get back to work.
Yeah, I agree with you, though, but we're still seeing some governors, talk about, staying closed until there's a vaccine. I mean, just the most bizarre stuff that I've ever seen out of a politician. I think it's political suicide personally, but, it's happening. As I watch through the business news, I see some of these governors out there, and they just continue to really, push the envelope that they want a terrible economy, or they want more jobs to be lost, or they want people to depend more on government. And that's very, very disturbing, if you ask me.
Yeah, very disturbing. And it's just not going to work, basically, right? I mean, it's just not working.
No, it's not working, and it hasn't worked. And the worst part is you're supposed to work for the people. And it seems to be the other way around. So, the people are suffering, but you're starting to see, places in New Jersey following suit of the Texas hairstylist that opened her salon. And you're now starting to see gyms in New Jersey opening up and things along those lines. So people have had enough. They're entrepreneurs. They're business people. Let them conduct business. And that's what this country is built on. And hopefully we get back to work.
Yeah, and really, there is no choice here when you get down to it, right? I mean, is there a choice?
Unless you want a depression, there's really no choice.
Yeah, and maybe that's what they do want. I don't know. But really, if we don't get back to work soon, then, like you said, you can look forward to a major global economic depression, and it ain't going to be pretty.
No, and anybody that doesn't realize what a depression is, and in all fairness, my generation, and I'm 50 years old, I've been spoiled because I've never really seen a true depression. I've seen some good corrections, I've seen some good, real deep recessions, but I've never experienced a real depression. But find somebody that's lived through that and let them talk to you or tell you about what they experienced. I remember my grandfather. Before he passed away. He lived to be over 105 years old.
Wow.
But I remember him telling me about a depression and how severe it was and what it really did, and how it changed the landscape of the United States, and people depended more on government afterwards. And that's the one thing I never want to have happen to my children. I don't want them to depend on anybody but themselves. So, it's really, really a sad state of affairs. But, everybody now is just leaning on government. The money printing is off the charts. And this is not free money. I just, I want to get that across to people. All this money that's being printed, 6 trillion plus or so, I don't even know the exact sum. But that money eventually will work its way through the system, and it will need to be paid back at some point in time. If you continue to print money, the repercussions are so devastating. I don't even want to bring them into the topic today.
I totally understand. I mean, it's even though the U.S. dollar is the reserve currency, it doesn't mean it's always going to be. And if they want it to not be, then printing up money. I mean, basically, we're getting a free ride on from the rest of the world for this.
At this moment, we really are. And again, that, like you just said, can all change. Things do not always stay the same. And I hope our leaders understand this.
Yeah, we can only hope. But they've screwed us before, and no doubt they'll screw us again. And we got to figure out a way not just to survive it, but actually to prosper from it. And probably what we're talking about is trading, because the market's going to be choppy this year. So big rally yesterday. What does that mean coming up?
Yeah, so yesterday we had really a monster rally. I mean, the Dow finished up, almost 1,000 points higher. It was just a really, really broad-based advance as well. All sectors participated outside of maybe two or three. So that was a really, really positive sign to see. Generally, the next day, like today, we're going to get a more subdued trading day. You'll get a little retrace back and forth. Markets will not advance. Even if they go higher, they usually don't go a whole lot higher. Yesterday, we had what we call a 90% up day. That means 90% of the equities were higher. And like I said, that usually calls for a little bit of a stall, a little bit of a pullback over the next couple of days generally. So we'll see, what kind of patterns form out of this. And that's what I think all traders should be watching for now. Things that move very far, very quick in one day. So now you wait, you see what kind of patterns settle in over the next 2, 3, 4, 5 days. And if a setup comes along, then it gives you another opportunity. But don't go out there chasing markets higher. I can't tell you how many, new novice type traders come to me and they're like, hey, send me an email. And, I'm like, you don't want to chase this. And then next thing you know, they're out of the money. So you let the market settle in. You watch the tape. You let the markets give you a pattern on the charts. And that's really everything you want to do.
Right. Yeah. So we're looking at our trades here. We're still off on oil, but oil's been going up.
Well, oil's had a tremendous move. In fact, if you look at crude today, it's flat on the day, but it's at 31.65. I think for now we've probably put the highs in for crude. I don't see crude getting above 33 until it can consolidate a bit. So I think the highs are in for crude near term. But it's considering this was negative 40 last contract. It's quite a move in oil. And just so everybody knows, today, the June contract will expire. So, we're up into a contract expiration, and we'll roll over to the next contract, which is July. But, pretty good move for everybody everybody thinking that the June contract was also going to turn negative. Pretty good move for crude oil overall.
Yeah, so we're over 30 now, but probably going to stall for a bit. But then again, on the other hand, Nick, most states are opening up in spite of the politicians. We've seen it basically mass. I don't want to call it civil disobedience, because that's not what these people are at. They're just had it, and they're going to the beaches. Like you said, businesses opening up in these states that still have the lockdowns, and people are just going about their lives again. And well, where do you think that crude can go to in the next few months?
Right now, when I charted crude, my upside was $33. So we basically have seen that today. We got to as high as, I believe, 33.20 or 33.44. So now it'll really depend on the pattern that's formed over the next week. But after this, I mean, if we really start to open up, airlines start to fly again, which they're actually starting to see heavier bookings and less cancellations. That was reported today by Southwest. Full disclosure, I own a Southwest Airlines. So that was a good sign to see. If other airlines start to see that same type of action, and then, crude could easily trade back up into the mid to high 40s. And I know that may seem far-fetched right now, but that's how fast it can move.
Yeah, and that is kind of remarkable, because that would be roughly a 30% or more increase from where it is today. And so what do you do here? You just stay on the sidelines for right now, wait for a little pullback in crude if you're not in it already?
Oh, yeah. For now, you just sit back, you let a pattern form, and then it'll be time to get into crude. But at the moment, it really got up to my upside objective, which was $33, way quicker than I would have ever thought. I mean, just think about it. If you go back to the 20th of April, which was 1 month ago, that May contract went negative. It's pretty remarkable that it traded down, 40 points, negative 40, And here we are, positive, 32.50 today. So it's been quite a comeback. Again, as things open up around the country, people start to, basically go to their politicians and say, hey, we need to go to work. I think you're going to start to see more people flying. I have a very good friend of mine who owns a company that travels all over the United States. He doesn't travel international, but he said, wow, he goes, what a difference now getting on the planes. He was flying 2-3 weeks ago with 6-7 people on the plane. Now the plane is 3/4 full.
Wow. So it's bounced back that quickly. I saw some airlines said for the time being, they're only going to take a load up to 60% of capacity. And that brings us to our hotel stocks. We already did really well on Hyatt. All the stocks were up yesterday pretty dramatically. What are the charts saying now? Pullback and then another entry point?
Yeah. So today, for instance, Marriott had a huge day yesterday. Today it's stalling out. It's down $1.98 today. Yesterday, I don't know, it was up something like 6-7%. It was just a tremendous move. Hyatt, which has been one that we've made money now with the call option twice. I love this thing into $65-70. So today it's pulling back a little bit, only down about 35 cents at the moment. But you just wait on pattern now. Let this thing consolidate sideways, and we'll get back into that again, and we'll make another 25, 40, 50% on it, and via the option, or I might even just buy the stock outright. But I really like the chart on all the hotels right now.
So the chart's looking good. Restaurant stocks, they've got to be making that good pattern.
Restaurant stocks, believe it or not, have already bottomed a long time ago, and they've really, really have acted well. One of the restaurants that have done exceptionally well has been Darden Restaurants. That's, I believe, the Olive Garden. That thing bottomed before the market on March 18th at a low of $26. It's now $76. So I missed that one. I did not get in that one, but I've made money in Starbucks. I've made money in Shake Shack. And I'm currently holding McDonald's, which I really love the chart there of McDonald's. And I think this is going to be a $200 stock before you blink.
Wow. Where's McDonald's at right now?
McDonald's is trading right around a 180 at the moment, but I could see this easily going above 200 pretty quickly.
Yeah. Well, they never really shut down all the way, because you got to realize McDonald's, fast food companies, a large portion of their business comes from takeout. And even when you go there to eat it in the store, you're just punching numbers, buttons on a kiosk, ordering up your food. So not a lot has changed. One thing I have found really interesting is that virtually every restaurant out there now has an affiliation with a delivery service. So you can order online. They've got it integrated into their websites, and local neighborhood restaurants are able to order online and deliver. And it's really pushed that whole ability. Online transactions over the web for every restaurant have become like a huge part of their business.
Yeah, it's a great point. And, to tell you, go back to McDonald's. I mean, when we were on the lockdown, I remember watching lines of cars, almost 20, 25 cars deep in just about every McDonald's I passed. And now, I look at that and I say, wow, that was reflected in the charts. So McDonald's is another stock that bottomed right there with the rest of the restaurant stocks on the 18th of March. The actual stock market itself, meaning the S&P 500, that bottomed on the 23rd. So that was the market's way of talking to us right there. And the pattern, McDonald's for the most part has been going sideways since early April. You can make a case since April 6th, April 7th. It's just really stayed in a range. That's one of my favorite patterns. When I see a stock just moving sideways like that, building a base off of the lows, that's a tremendous, tremendous pattern. And when they rip it to the upside, it will go fast and it will go furious.
Yeah, and it'll be one of those things. 1 or 2 days, it'll hit the target, and then so that's a good trade to go in and out of options or the stock.
You could do either way. I actually own the shares of McDonald's, and I've done it that way. The options are a little bit pricey right now with high premiums. So when I see high premiums, I just go right in and buy the stock myself.
Right. So any sectors to be short on?
Right now, I'm not really in that camp of shorting anything. I'm generally a trend follower. So, unless I see a turning point coming in time, I really try to stick with it. So I've been predominantly holding all longs. In January, February, I was short everything. But this time around, I'm pretty much long everything.
Okay, so question, VIX. It's kind of going sideways now?
No, the VIX has been falling, and I've been telling my members I expect the VIX to actually go lower. So when I've worked out the math in the VIX, I thought last week with options expiration, the VIX could get a short-term bounce, and it did that. It went from basically a low of around 26, and it went up as high, I believe, as 39. Now the VIX is back down to 29, and I see it going lower.
Lower. Well, the way it's constructed, it's guaranteed to go lower over time if volatility doesn't jack up, right?
Yeah, so it basically, I always tell members that it's a spike index. So, back in February, March, I mean, this thing spiked to 85. Now you're back down at 29. We're still above 20, which tells us, we still have a fair amount of volatility out here. But the reality of it is the VIX has come down quite a bit. There'll be some bouncing in here around this current level, but ultimately I do believe the VIX goes lower.
All right. Well, so we're getting to like a little area of complacency then, aren't we?
Well, not yet. Not yet. I don't think we have complacency right now, and I'll tell you why. Most people are bearish still. You have a lot of the talking heads. You heard them last week, whether it was Stan Druckenmiller, David Tepper. You had the Boeing CEO talk about a major airline failing. You had a lot of people still saying, the economy can't open without a vaccine. We have no vaccine. So, all of the chatter that's going on is still a lot of negative chatter. And that's why you see the markets doing what they're doing. They climb the wall of worry.
Yes.
When we have no worry and we do have complacency, that's when I start to worry. So that's how you have to look at markets.
So when we have no worry, that's the time to worry. Huh? That's funny. Well, it's kind of like in times of peace, prepare for war. In times of war, prepare for peace, right?
It's pretty much like that. When you train your brain to be a trader, you're always going to be contrarian to everyone else, and that's just something that I guess is embedded in my body now. I just can't think any other way.
Yeah, well, and we know that that's probably a good thing. The problem is when you think you're a contrarian and you're not, right? Has that ever happened to you?
Not in the last 20 plus years, but prior, yeah, I guess, you try to be cute with the market. Now, I just really use the charts. I use the mathematics behind the charts, and that's about it. I try to keep it as simple as I can. Trying to get too cute sometimes or trying to think too much really just gets in the way.
Yeah, you can't outthink the market. But one thing I wanted to ask you, because you are a master trader, execution. You can't always get in at the bottom. You can't always get out at the top, as we've seen with silver, right? Both of us kind of exited that one a little prematurely. But execution of your trades, how important is that?
Well, I think the entry is very, very important. A lot of times, what I like to do as a trader is to just wait for the setup. And I have certain chart parameters that I look at, and they usually will give me the setup. So, for instance, let's just go over the silver position, because that was, a really, really good trade. But when we entered that trade, I believe that was on the 21st of April. And if you take a look at, say, SLV at that point in time, people will realize that, it was still just consolidating. It wasn't perfect, right? A perfect entry on that trade would have been May 4th. But, you're never going to be perfect. So what? We were, down, maybe a little bit on the position by a few percent. But then you see the big rocket ship move that occurs. So it's never easy. But as long as you have the pattern and you have the general range of it, that's where you can enter. And I even tell people as well, I'm doing a seminar this coming Thursday evening at 7 p.m. For a lot of our members, and a lot of institutional traders come over there too to learn this stuff. And what I'm going to be showing them is that, hey, we don't always need to enter perfectly. We just need to know the picture of where it's ultimately going. So yeah, I got out of SLV at 1550. Ultimately, I made about 9% on the entire trade, but really the second half of the trade, I made much more percentage gain on that. But I like to take half off the table. I like to move my stop to break even. This way I'm just playing with the house's money, and I'm letting that second half run for that big advance. But, I did the same thing with, say, an equity like GDX. I mean, that was an equity where I made, over 11% on the first and second half in total. The second half was, somewhere around 18%. I'll give you another example. Yesterday, I closed out a JBL position. Total gain on the trade was 13.3%. But the second half position, I made over 21%. So you really just want to have that first initial target, lock in your gains, move your stop to break even, play with the house's money, and let that second half explode to your second target. If your math is right, hey, you're going to make some money. If your math is wrong and something happens, you get stopped out, break even. I had plenty of, if you look at my trading record, you'll see some gains in there with just 2%. 1.5%, 3%. Those are all trades that I got stopped out of the second half, break even. So again, I think you generally want to have your range, let that target be achieved, and then look for that second target to be achieved as well, and then move your stop to break even. That's what you want to do as a trader.
Yeah, and I suggest if you want to find out more about these trading strategies, and how you make the market work for you, how you're acting as a contrarian when it's most important to be, then you need to go over to inthemoneystocks.com. Check out Nick's Twitter feeds at ITMS and at Nick Santiago 01. Check out our Twitter feed so you can hear all of our podcasts, and that would be at Kerry Lutz. And Nick, we will talk to you tomorrow. It's getting pretty exciting. This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.